Alright, let's get right into it because this is urgent. If you're holding Pi Network tokens or even just watching from the sidelines, you need to pay close attention. The price of Pi is showing some seriously worrying signs right now. We're seeing what looks like the beginning of a major downward trend, a bearish move that could send its value tumbling. This isn't just a small dip we're talking about. It's a potential crash that could wipe out a significant chunk of its current price. I've been watching the charts, I've been reading the data, and honestly, the indicators are all pointing in a direction that makes me very, very cautious. It's time to stop hoping and start preparing. The situation is critical because many people got into Pi thinking it was a low-risk way to enter the crypto space. You mine it on your phone, you tell your friends, and you hope that one day it's worth a lot of money. But here's the reality check. The so-called IOU price of Pi, the one you see trading on some exchanges, is under immense pressure. We're talking about a potential drop below the key psychological level of 40 cents. When a digital asset breaks below a major support level like that, it can trigger a wave of panic selling, pushing the price down even faster. This is the kind of scenario where investors who aren't prepared can lose their shirts. What's happening isn't just random market noise. It's a combination of factors all hitting at once. Let's break this down into simple terms. When you hear financial experts like me talk about bearish pressure, don't let the jargon intimidate you. All it means is that there are more people wanting to sell an asset than there are people wanting to buy it at its current price. Think of it like a giant scale. On one side, you have the buyers pushing the price up. On the other side, you have the sellers pushing the price down. When the seller's side gets heavier, the scale tips downward. That downward force is what we call bearish pressure. The word bear in finance is used to describe a falling market, supposedly because a bear attacks by swiping its paws downwards. For Pi Network, this means that the early adopters and speculators who were holding on to their IOUs are starting to get nervous. They're looking at their holdings and thinking, maybe I should sell now and lock in my profits before it drops further. This creates a domino effect. This pressure isn't just a feeling, you can see it in the data. You can look at trading volumes and see if more coins are being sold than bought. You can look at the order book on an exchange, which is just a list of buy and sell orders. If you see a huge wall of sell orders stacked up and only a thin line of buy orders below, that's a clear visual sign of bearish pressure. It's like a dam holding back a river of sellers, and if the buy-side support breaks, the price can flood downwards very quickly. Now let's talk about that specific number of 40 cents. Why is this level so important for Pi? In trading, certain price points become psychological barriers or support levels. These are often round numbers or previous lows where buyers have historically stepped in to push the price back up. For the Pi IOU, the area around 40 cents has acted as one of these floors. But what we're seeing now is that this floor is getting weaker and weaker. The bearish pressure we just discussed is pounding on this 40-cent support level. Think of it like a wooden plank that's being hit with a hammer over and over. The first few hits don't do much, but eventually cracks start to form. With each new wave of selling, the 40-cent support level for Pi gets another hit. The chart data shows that the bounces off this level are getting smaller, which is a classic sign that the buying power is drying up. If and when Pi breaks below 40 cents, things could get ugly fast. This is because of something called stop-loss orders. Many traders automatically set their systems to sell an asset if it falls below a certain price to limit their losses. A huge number of these stop-loss orders are likely clustered just below the 40-cent mark. If the price pierces that level, it will trigger a massive cascade of automatic sell orders. This sudden flood of supply with very few buyers will create a price vacuum, and the value could plummet to the next support level, which might be as low as 30 cents or even 25 cents in a very short amount of time. This isn't just speculation, it's a predictable pattern in financial markets. Breaking a key support level is a major bearish signal that tells the entire market that the sellers are now in complete control. It shakes the confidence of even the long-term holders and can lead to capitulation, which is when everyone gives up and sells in a panic. The path to under 40 cents is being paved by weakening buyer interest and increasing seller aggression. Watching this level is absolutely critical for anyone involved with Pi right now, because if it breaks, the ride down could be very fast and very painful. So what's actually causing this wave of selling? It's not just one single thing, but a perfect storm of several negative factors. First and foremost is the continued delay of the Pi Network's open mainnet launch. For years, the promise has been that one day, the Pi you mine on your phone will become a real tradable cryptocurrency on a live open network. But that day keeps getting pushed back. The core team has set conditions for the launch, but progress seems incredibly slow. This prolonged uncertainty is killing investor confidence. People are getting tired of waiting for a promise that may never come. Another huge reason is the nature of the Pi IOU itself. It's important to remember that the Pi being traded on exchanges like HTX and Bitmart is not the real Pi coin. It's an IOU, or an IOU, which is basically a speculative placeholder. These exchanges are letting people trade a promise of the future coin. As the open mainnet delays continue, more and more people are realizing that these IOUs are not backed by any actual transferable asset. The risk that these IOUs could become worthless if the mainnet never launches or launches in a way that doesn't honor them is becoming a very real fear, prompting people to sell now while they're still worth something. On top of that, the general crypto market sentiment is not helping. We are in a period of high uncertainty across the board. Bitcoin and Ethereum have been struggling to maintain their momentum, and when the market leaders are shaky, smaller and more speculative projects like Pi get hit the hardest. Finally, there's the issue of hype exhaustion. Pi Network grew massively based on social media hype and referral marketing. But hype has a shelf life. After years of clicking a button on an app with no tangible reward, even the most optimistic users are starting to lose interest. If you're holding Pi IOUs, this is a time for vigilance, not for blind hope. You really need to be watching a few key indicators like a hawk. First and foremost is that critical 40-cent support level we've been talking about. Make sure to set up price alerts on whatever app or exchange you use. You absolutely need to know instantly if the price breaks below this point. Don't just check it once a day. The market moves fast. A decisive break and close below 40 cents on a daily chart would be a major confirmation that the bears are in control, and honestly, a deeper slide is likely. This is your number one red flag. Second, you need to monitor trading volume very closely. Volume tells you how much conviction is behind a price move. If Pi's price is dropping on very low volume, it might just be a small group of sellers and could reverse. However, if the price starts to fall below 40 cents on a massive spike in selling volume, that's an extremely bearish sign. It indicates that a large number of holders are rushing for the exits at the same time. High volume breakdowns are the ones that lead to significant crashes, so keep an eye on the volume bars on your chart as much as the price itself. Beyond the charts, you must pay attention to any official announcements from the Pi Network core team. Their communication has been sparse, and that's honestly part of the problem. Any news, positive or negative, regarding the open mainnet launch will have a huge impact. Look for updates on their official blog or social media channels. Specifically, watch for any changes to the mainnet launch criteria or timeline. A further delay or the addition of more difficult conditions would likely trigger a sell-off. Finally, keep an eye on the broader crypto market, especially Bitcoin. Bitcoin is the market leader, and its price action often dictates the direction of the entire altcoin market. If you see Bitcoin taking a sharp dive, it's almost certain that speculative assets like Pi will fall even harder. Don't analyze Pi in a vacuum. Alright, let me give you my personal, unfiltered opinion on this. I always try to be an optimist, but in the case of Pi Network, my optimism is wearing very, very thin. Frankly, I believe the future for the Pi IOU's price is looking overwhelmingly bearish in the short to medium term. The project is stuck in a cycle of hype and delay, and the market is losing patience. The core promise of crypto for everyone is a great marketing slogan, but a project needs more than a slogan to succeed. It needs a working product, a clear use case, and a transparent path forward. Right now, Pi is lacking in all three areas. The biggest problem, in my view, is the massive disconnect between the millions of users mining on the app and the actual tradable value. The supply of Pi coins that will eventually hit the market when the mainnet opens is astronomical. We're talking about billions, maybe even tens of billions of coins. Basic economics tells us that when supply is huge, the price per unit tends to be very low, unless there is an equally huge amount of demand. Where is that demand going to come from? The hope that millions of users will automatically create a thriving economy is just that. A hope, not a strategy. I think the most likely scenario is that the IOU price continues to bleed out as we approach the eventual open mainnet launch, whenever that may be. And when the mainnet does finally open and those billions of real coins become transferable, we could see a massive sell-off. Everyone who has been mining for years will finally have the chance to cash out for real money. This initial flood of supply could crash the price to fractions of a cent, far below the current IOU price of around 40 cents. The IOU market is a fantasy island, and the real world of supply and demand could be a rude awakening. Now, could I be wrong? Absolutely. It's crypto. Anything can happen. The Pi team could announce a groundbreaking partnership with a major corporation or reveal a killer app that gives Pi a real-world use case overnight. That could change the entire narrative and send the price soaring. But as an investor, you can't bet on miracles. You have to look at the evidence in front of you. And the evidence today points to a project that is overhyped, underdeveloped, and facing a massive supply overhang that will be very difficult to overcome. I'm staying on the sidelines for this one. So, if you're holding Pi IOUs and you're feeling nervous, what can you actually do? Screaming at your phone won't help. The most important thing is to have a plan and practice good risk management. First, you need to decide what your goal is. Are you a true believer who plans to hold for the next 10 years no matter what? Or were you hoping for a short-term gain? Be honest with yourself. If you can't afford to lose the money you have tied up in these IOUs, you need to seriously consider reducing your exposure. That's just smart personal finance. One common strategy is to de-risk by selling a portion of your holdings. You don't have to sell everything. For example, you could sell enough to get your initial investment back if you had one. That way, whatever is left is pure house money, and you can let it ride without the stress of losing your own capital. Another approach is to set a hard stop-loss price for yourself. Decide on a price below which you will sell, no matter what. This takes the emotion out of the decision. If it hits your number, say 38 cents, you sell. This protects you from a catastrophic loss if the price goes to 10 cents. This is also a crucial time to do your own research, or DYOR as they say in crypto. Don't just listen to me or some random person on social media. Go read the Pi Network white paper again. Join their official community channels and observe the sentiment. Are people still excited, or are they getting frustrated? Look at the project's development updates on GitHub, if available. Is there real coding activity happening? The more you know, the more confident you'll be in your decision, whether it's to hold, sell, or even buy more if you believe in a turnaround. Finally, avoid making emotional decisions. Panic selling at the bottom of a crash is just as bad as FOMO buying at the top of a bubble. This is why having a plan before the crash happens is so important. Stick to your strategy. If the price is falling, don't just stare at the chart all day, as it will drive you crazy. Set your alerts, know your plan, and walk away. Managing your emotions is one of the hardest but most important skills in investing. Okay, we've covered a lot of ground, so let's boil it all down to a clear, actionable summary. The situation for the Pi Network IOU price is precarious. There is significant bearish pressure, driven by mainnet delays, fading hype, and a weak overall crypto market, which could push the price below the critical 40-cent support level. A break below this level could trigger a rapid and severe price crash due to automated selling and panic. This is not a time for complacency. It is a time for a clear-headed strategy. Your financial well-being depends on the actions you take right now. Here is your action plan. First, evaluate your personal risk tolerance. How much can you truly afford to lose on this? Your answer to that question should guide your entire strategy. Second, set price alerts for the 40-cent level. This is your most important indicator. Decide now what you will do if it breaks. Will you sell all of your holdings? Half of them? Have a pre-written plan. Third, reduce emotional decision-making. Don't panic, sell, or hold on based purely on hope. Stick to the logical plan you created when you were calm. For those who believe in the long-term vision of Pi, the strategy might be to simply hold and ignore the short-term noise. That is a valid choice, as long as you understand the profound risks involved, including the possibility that the IOU could go to zero, or that the real coin will trade for a fraction of the IOU price. For those who are more risk-averse, selling a portion to secure some profit or get your initial investment back is a prudent move. There is no shame in taking profits or cutting potential losses. It's what smart investors do. Ultimately, the choice is yours. My goal is to give you the unvarnished facts and a framework for thinking about the situation. The evidence strongly suggests that caution is warranted. The headwinds are strong, and the project's internal issues are significant. Stay informed by monitoring official Pi announcements and the broader market. Do your own research and build a plan that lets you sleep at night. Whatever you decide, do it with your eyes wide open, fully aware of the potential for a significant crash in the near future. Good luck and invest wisely.